Tony, are you finding clients wanting to be more aggressive, more conservative, staying the same? Is there a dynamic that's going on now?
I think there's some fear. There's definitely a move. I think emotionally, to Dave's point, folks are scared. There's anxiety. There's all this talk about U.S.-China, inverted yield curve. So many investors don't necessarily understand what that means for me in my retirement. A lot of it just has to do with what phase, what chapter you're in life, right? If we're in retirement, income's gone, we're counting on that portfolio for income. Big question we always get, do we have enough money, we're going to be okay? It's probably the driving concern for most retirees or folks approaching it. So there's definitely been this emotional push towards wanting to be more conservative, and maybe for some folks that's appropriate, but I think there will be some opportunities as things reprice, and it is an emotional response to maybe grab some of those stocks that weren't priced correctly that might provide a good opportunity to get into those.
Okay, the topic is WTMJ 2020, so let's look towards next year. Again, the dominant national story is going to be the election. Lots of people are going to be speculating on a daily basis about who's ahead in the polls, what is this going to mean? Now, because it's an election year, Tony Drake, does that mean people should do something different with their money? Do you do something different with people's money in election years?
I think common sense might lead you to believe that. The data shows us only 3 out of the last 21 federal elections, back to the 1920s, have we had a negative year in the S&P, but I think we're also in a different political environment today. Dave brought up a great point. You can't stick your head in the sand, right? We used to joke here, when you stick your head in the sand, you expose a large target, right? So got to be smart about it. You have to look at what sectors are being affected, and there's some trying to get ahead of the tail, right? What's going to happen to these different sectors if we do have a big change in policy and what's happening in the United States? So I think we may see a little bit different election year than normal, but traditionally it doesn't have a large effect on the markets.
Guys, I know when people come, Tony and Dave, to your shop, a lot of times they're talking about, of course, retirement planning. And one of the big components when you're trying to figure out how much you're going to have, moving forward, is Social Security. Now, we all understand, I think, that there's a Social Security issue. In the next year or two, there's going to start to be more outflows than inflows. What is the future of Social Security? How concerned do people need to be?
And again, I think it boils down to emotions and facts, right? I mean, it's scary to hear in 2035 they're going to be able to fund 75 cents on the dollar, but lots of things.
So just explain that, Tony. So right now, if you're getting a Social Security check, if nothing happens at all, what would happen to somebody who was getting 15 years from now?
So what you're seeing on your Social Security statement is that they have the funds, if nothing changes, to your point, to fund about 75 cents on the dollar, which sounds very scary. A lot of simple ways to resolve that. We also hear other scary headlines during the last presidential election. You heard about means testing, which is what they do in some other countries where assets are of a certain level, you won't get it. Again, very difficult to imagine that happening in this political environment. I also think you look at, one of the strongest voting demographics are folks receiving Social Security. Pretty hard to mess with those folks, right? So you have to deal with facts and what you can control now, right? Make a conscious decision about Social Security when you're starting it. Might be the right decision to turn on at 62, but understand you're taking that 25% reduction. There's some opportunities to grow it at 6 and 8%. May or may not make sense for your family, but think about the bigger picture. How does Social Security relate to your taxes? Does not taking it give you some growth and also open up some income to do some Roth conversions? Get some money growing income tax-free. Think about it as an overall part of your income plan, not just a quick decision. I'm 62, I'll turn it on. Right? That might be the right decision, but make a conscious decision. If you don't know how to work through the questions, find someone that can help you work through that to make the right decision with the facts we have today.
Let's talk for a minute, Tony and Dave, about people getting started with investing. I know a lot of times we talk about people coming to the close of their careers who have money to invest, etc. But, some people inherit a lot of money, some people win the lottery, but most people acquire wealth over the years by accumulating it, by getting a philosophy of saving. I know a lot of people who say, we can't get started. We've got student loans, we've got this, we've got that. We want to save for the down payment. What do you tell people about how important it is and how you get started?
So Warren Buffett famously said, don't save what you have left after spending, spend what you have left after saving. In other words, pay yourself first. Begin to save and find a way to do that. If a person can save $500 a month starting at age 25. By the time they get 30 years out, that will accumulate $500 a month using a relatively modest interest rate, something that the S&P fund has done over the years. It will turn out to be $1 million. And there's a lot of ways to do that. You can do it through your 401k plan if you have that at work, or you can do it outside of that in a mutual fund and just have it drafted out of your account. But again, pay yourself first. Make sure that you're spending what you have left after you save.
And so many folks that even at work are missing out on the matching funds, right? That's free money, just words you're not going to hear together too often.
Right.
And I think just starting somewhere, whether it's automatic deduction, generally whether it's coming out of payroll or deducted automatically from a bank account, you're not going to notice it. I also encourage young folks to really consider the Roth. You know, mom, dad, grandma, grandpa, somewhere in life said to us, put everything you can in that tax deferred account, because when you're retired, you're going to be in such a tiny tax bracket, you won't pay anything. Not always the case, right? For most folks, average incomes, that deductibility, the impact of that up front, you know, tax-free income is really, I have yet to have a client say, boy, I wish I was paying taxes on my income.
Our very own Scott Warris has been out and about in the crowd and taking questions. And Scott, I understand you have a question from somebody in the audience.
I do, Jeff. This is from Scott from Fox Point. Looking ahead to 2020 and recognizing that the political narrative sucks a lot of the oxygen out of the room, other than politics, what are you guys keeping an eye on that may impact one's financial status, or to the impact that it can have the housing market beyond the political narrative, recognizing how big that really is?
Yeah, definitely trade for us. And again, separating the emotion and the facts. You know, we're in a different environment, right? There's tweets, there's instantaneous communication. It's later, you know, walk back. So you have to make sure you're operating on fact instead of emotion. But I think businesses are nimble. I think it's the uncertainty. Uncertainty is just such a driver of the volatility in the markets. And it's, you know, is it going to be 10%, 15, 25? Are we going to be able to have companies listed from China? You know, it's that uncertainty that causes so much volatility. Interesting numbers, less than 7% of manufacturing from Wisconsin is exported out of the country. It's about $1.5 billion, still a serious number, but you know, the impact, I think, you know, it may be a little bit overblown, but again, operate on fact instead of kind of the news of the day. Have a long-term picture for the portfolio, have a plan in place, stress test it for different market environments, and make sure you're marching forward and sticking with the plan.
Guys, one of the things I love about being at events with all of you is the minute you walk in, I automatically know that, especially in your particular areas, you are all the smartest guys in the room, but you don't necessarily flaunt it for all the rest of us. I very much appreciate all of you spending an hour with us to, you know, share your knowledge and talk about what we're going to be looking at. And for people who are listening in our audience and everybody who's here at Potawatomi Hotel and Casino, these three guys really are the smartest people in the room when it comes to what they know. So Dave Spano, Brian Wickert, Tony Drake, thank you all so much for joining us at WTMJ 2020. It's been wonderful.